Coming up on today's program, United Nations warns that Africa could fall into recession this year if multilateral lenders and investors don't help the continent. And Namibia joins other African countries in closing airports and imposing a partial lockdown on the capital to prevent the spread of the coronavirus. And South African Airways suspends all flights until April the 16th, even as South Africans brace up for a 3-week lockdown to curtail the spread of the coronavirus. Well, we're glad to have you on Business Incorporated today. I am BC Adebayo. Well, let's begin the show with the warning from the United Nations that Africa could fall into recession this year if multilateral lenders and investors don't help the continent waive debt servicing costs that could be used to halt the spread of the coronavirus pandemic. The UN says many African economies may be burdened with high debt loads after years of low global yields and would need fiscal space immediately to expand their healthcare systems and build a social protection system. The United Nations Economic Commission for Africa is considering reviewing the region's growth estimate for this year, which was already reduced to 1.8% from 3.2% earlier this month. This comes after African finance ministers agreed last week that the continent needs a stimulus package of $100 billion, including $44 billion in debt servicing waivers to face the new virus. Well, let's hit the markets right away, starting with intraday numbers coming from the African markets, where the all-share index here in Nigeria was down 0.09% at intraday. Well, the positive rally is still ongoing in South Africa, where the JSE index was up 4.78% at intraday, and that's even as the citizens prepare for a total lockdown from tomorrow to curb the COVID-19 spread. In Egypt, the EGX30 was also 0.95% positive. The Kenyan Burst closed 2.86% south on Tuesday. And in the Middle East, all the markets are posting strong gains at intraday, with the Abu Dhabi index shining the most with 7.39%. In Dubai, the index was 6.42% positive, while the Qatar index was also up 3.12%. The Saudi Tadawul was also up 1.3% as at midday Nigerian time. And of course, European markets are trading higher today after U.S. senators agreed to the Trump administration's massive economic rescue bill, unlocking $2 trillion worth of funds. Chelsea Delany is standing by at the Frankfurt Stock Exchange for updates on today's market activities. Good afternoon, Chelsea. European stocks extended gains as lawmakers in the U.S. and Germany move ahead with stimulus packages to offset the economic impacts of COVID-19. But could this just be the beginning of a longer-term comeback for the markets?
Well, that was really the narrative at the start of the the start of the trading day. The DAX had opened up about 2 to 3% after gaining more than 10% yesterday. But we've seen this completely reverse over the past couple of hours. If you look behind me, the DAX is now down about 2%. So I think it's much too early to be talking about a longer-term recovery for markets, and volatility remains quite high. Investors had been really anticipating these stimulus packages that had been the key driver of the markets over the past couple of days. And I think now that we have the stimulus packages getting closer to being passed, and that money is going to start flowing into the economy quite soon, investors are now going to be refocusing on the economic impact and the spread of the virus. And in this situation, it's still quite severe. Europe is looking at a severe, steep recession this year, and the shutdown measures we're seeing are not anywhere close to being over. So I think there's still a lot for investors to be concerned about.
Now, countries like Vietnam are temporarily halting exports of key food items as panic shoppers clean out grocery store shelves around the world. What steps have countries taken, and what could be the impact for global food security?
This is emerging as a key concern for the global economy. We've only seen a couple of countries take these steps. Vietnam today, for example, announced it's going to be halting rice exports temporarily while it sort of evaluates its domestic food supply. But we've also seen Kazakhstan, which is a huge exporter of wheat, say that they're not going to be exporting wheat or other food products right now. Russia, also a big wheat exporter, is considering also halting exports. All of these countries are sort of looking at their domestic economy and saying, okay, do we have enough of our own food to get us through this crisis? We don't want to be sending it all abroad. So they're trying to secure the domestic food supply, but there are a lot of countries that depend on food exports, and it's generally more vulnerable areas. So a lot of countries in Latin America are big food importers, as well as in Africa. So if this does become more of a trend among countries that do produce a lot of food, it could become a real threat to food security throughout the world.
All right, Chelsea, we'll have to leave it there at this time. We hope to see you again tomorrow. Let's cross over now to the UK, where data from the Office for National Statistics released today shows inflation softened slightly to 1.7% in February. Of course, news also came in from there that Prince Charles, the Prince of Wales, has also tested positive to the coronavirus. Well, Juliana Olayinka joins us now for details of all this. Good afternoon, Juliana. How are you doing today in spite of the COVID-19 crisis?
Still healthy, thanks, Bissy. Nice to see you back in the chair.
Thank you, Juliana. So did the inflation numbers match consensus expectations with the ongoing coronavirus outbreak, and how are the markets reacting to this data?
Well, it has and it hasn't really. Unfortunately, this data from February, which shows that inflation fell by 0.1%, it was up to a 6-month record high of 1.8% in January. In February, it's 1.7%. But this, of course, predates the economic shock, which is likely to take place in the UK over the next couple of weeks. Now that the UK is in lockdown and all retail stores and restaurants and bars are closed, there are some economists that believe that inflation could fall as low as 0.5% as these business owners just push down their prices to try and get some of their stock off the shelves. After this data was released, it did push up the pound slightly. And at early trading, the FTSE all-share was actually doing quite well. It's lost some of its rallies, but let's have a look at the numbers at intraday. The all-share is up 1.57%. The FTSE 100 also up by 1.02%. And the FTSE 250, the domestic market, that's up by 3.54%. In currencies, the pound is also up on the dollar by 1.19%, up on the euro by 0.92%, and up on the Japanese yen at intraday by 1.18%. I must add, Bissy, that JD Sports, that's that pretty successful sports retailer here in Britain, their shares jumped 14% at early trading, and that's because their bosses have said, even though their stores are closed, they believe that the online sales that they're receiving should help them over the next couple of months. They're the biggest riser on the FTSE at intraday.
Right now, the UK Chancellor has told airlines to find other forms of funding and not turn first to the government for help getting through the coronavirus crisis. Why and how are the airlines taking this?
Well, this is an interesting story because, of course, we've been discussing this for at least the past 4 weeks. And one of the biggest falls in the world of the economy is the aviation industry. They've cancelled thousands upon thousands of flights. They've had to let go lots of their staff. And just a couple of weeks ago, the Virgin Atlantic bosses did write to the British government, and they said unless they receive a bailout worth billions of pounds, then the aviation industry may not recover. We do know that the Treasury and the aviation bosses have been having ongoing discussions over the past couple of weeks about just how some sort of stimulus can be given to them. But there was a leaked report by a letter written by Chancellor Rishi Sunak over the weekend to aviation bosses saying that basically the £330 billion of measures that the government put in place to help the UK economy does also apply to them, and tax deferrals and VAT cuts cuts should be taken advantage of before they try to consider coming to the government again for another bailout. That's basically pretty simple. He also outlined that airlines should go to their billionaire shareholders before coming to the government. So it's pretty strict, pretty stark, but we do know that the aviation industry contributes billions of pounds to the UK economy, as well as employing hundreds of thousands of staff. So even though Rishi Sunak is asking them to go back into their piggy bank and look at how much money they've got in store, it's inevitable that the government will have to bail some of these airlines out, should it come to that.
Juliana, now this question applies to people like you and I who actually can't work from home. Now, the health secretary yesterday announced that those who cannot do their jobs from home should go to work and keep the country running, and says that construction work can continue so long as people are about 2 meters apart. But this has come under criticism. Will the government bow to pressure to halt construction work?
Well, the government is likely to bow to pressure. Prime Minister questions, PMQs is going on as we speak. Boris Johnson is speaking to a limited number of opposition members before the House of Commons is officially shut down later tonight. But yes, it is a big issue. We have heard that essential workers are allowed to travel. Problem is, Bissy, for anybody that gets on the tube or who's seen pictures of the tube, it's hard not to miss the construction workers, because typically they're wearing work boots and they've got quite scruffy clothing on. And one of the issues a lot of these construction workers are having, and the government are having, is when they're on these work sites, they are not 2 meters apart. And they were pretty strict today, saying if you can't be 2 meters apart at work, don't go into work. So that's a huge issue. Boris Johnson is likely to have a lot of answers to prepare when people are asking him why these construction sites are ongoing. I did hear yesterday, I believe, that Crossrail, which is that massive £1 billion rail site that's happening in London, they've temporarily closed down. There are construction sites up and down the length and breadth of Britain that have shut down. But again, we've been having this conversation for a while. A lot of issues is that these construction workers are freelance staff, or they're PAYE self-employed staff. And for them, if they don't go to work, they don't get paid. And the Treasury are yet to be clear on how they'll be looking after the self-employed, Bissy.
All right, Juliana, let's remember to always stay safe this period. We'll see you again later. In Asia, stocks also surged on Wednesday after a massive coronavirus stimulus bill was struck between the White House and Senate stateside. The Nikkei 225 in Japan led gains among major markets in the region, adding 8.04%, as shares of index heavyweight fast retailing gained 8.78%. The Topix index rose 6.87%. South Korea's Kospi also saw robust gains, as it jumped 5.89%, closing at 1,704.76. Hong Kong's Hang Seng Index gained about 3.4% as at its final hour of trading. Now, the Shanghai Composite was up 2.17% to about 2,781.59, while the Shenzhen Composite rose 2.919% to approximately 1,714.86. In Australia, the S&P ASX 200 jumped 5.54%. Well, it's the same story in the U.S., where stock futures were surging again in early morning trading following Tuesday's historic rally as the White House and the Senate reached a deal on a coronavirus stimulus bill. Earlier on, the futures of the Dow Jones Industrial Average pointed to a gain of more than 700 points at the Wednesday open. S&P 500 futures and Nasdaq 100 futures also pointed to opening gains. The action in the futures market followed an epic comeback on Wall Street yesterday, when the Dow surged more than 11%, notching its biggest one-day percentage gain since 1933 and its best point increase ever. The S&P 500 rallied 9.4% for its best day since October 2008. Away from the stock markets now to the crude oil markets, where oil prices also extended gains for a third session today, rising alongside broader financial markets. Brent crude was trading up 65 cents at $27.80 a barrel. after earlier rising to a high of $28.29 a barrel. U.S. crude rose to a high of $25.24 a barrel early in the session and was at $24.86 a barrel in early trade. Still to come on the program, South Africans brace up for a 3-week lockdown to curtail the spread of the coronavirus and other stories. Please stay with us.